Production.
What is poppin'? Let's look at Neptune digital assets. I just posted a video a few days ago, but I want to get into a little bit further detail. The last one pretty much just said number go up. Now that I got some more time here, let's look at what we're analyzing. So, under this 43.5 cent area, what we're seeing in the stock's price is it's coiling up here and it's getting tighter right under this range. Now, a reason why this is bullish is because we've been under this zone for a while, and every time we've got up to this zone, there's a rejection, right? Come up here, we reject. Now we're hanging around. So that's what we want to see. The 8 EMA has been support since October 2023, and we've been slowly just gliding in this range. So what I do find interesting is that like everything was pretty much booming in November, December, like 2023, right? Like this name, not so much. Especially in December, this name was kind of just sideways. It had a good few weeks, got rejected, a nice week, and now we've been struggling in this range. We're still holding up though, right? So when we look from a 2-day perspective, what we could be dealing with here is we got some sort of ascending triangle somewhat developing in this range, and we've got this trend line that's we could use here that's been holding. So I like that. Like we could mark it out somewhere around here, right? This has been holding, and now we're just, again, the price range, again, you zoom into the 2-hour, it's choppy, but it's getting tighter and tighter in this area. So maybe something we could look for is this zone acting as resistance here. Something like this, right? That's our resistance, and we're playing in this zone. It's going to get tighter and tighter and tighter and tighter. Now what we need is an influx of bullish volume. And what I think is great is that these ETFs just got approved. Maybe there's money on the sidelines, right? Maybe potentially there's money on the sidelines that has been waiting to go into assets like Neptune digital assets. Okay, so that's something that I think is worth kind of paying attention to. If we're gonna get a nice pump to end this week off and close up around this 43 to 45 cent range, because that would kind of give us the signal here that, you know, we're going to get the continuation to the upside in the next few weeks. Okay, now from a bearish perspective, what can we look for, right? What we could look for here is this price zone that we've been kind of, you know, it's been holding us back for a bit. Right, we broke up over it. It's now acting as support. Maybe we want to come back and retest that. We did fill this area, came back, retested this area, but I wouldn't leave this out. More specifically, this area, 34 cents to 35 cents. There's still a potential that we revisit that zone and then continue up eventually, maybe late February, mid-February. I am leaning a little bit more towards the bullish price action, especially due to this ETF news. So they go live tomorrow and Friday, the first few days, a couple days. I think that's going to lead into like some major capital coming into the space. Then we have Monday as a US holiday, I believe. I'm not 100% sure. Somebody correct me with that. Markets are going to be closed for 3 days this weekend. It gives, like, you know, crazy opportunity. People might want to be rushing in to get into these assets before the long weekend. So there's so many possibilities. Overall, I think the idea here, weekly time frame, the upside is ridiculous here. Cannot be ignored. So we're just right now struggling under this zone. but maybe this is what we want to see. Weekly time frame, 8 EMA still acting as support, and we slowly curl up until there's no more, until there's no more resistance in this area. And then what we'd be looking for in terms of resistance is this 59-cent zone, because now that is where the most amount of shares have been traded. When you look from this, like, it's here, right? When you start looking from April 2021 up until now, the most amount of shares traded was at 60 cents. Okay, so maybe we float right up into 60 cents, and then that's an area that we're going to have to stall at and develop some sort of pattern. It literally could look something like this, where we're in this range, we play, we break out, and then we overshoot, maybe come down like this and create some sort of a pattern, right? That would make sense before we get a continuation, right? This is a very possible scenario. Do not rule this out. That's the breakdown here on NDA.